This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on January 24th at 8:10 a.m. Mountain. Connect with Harold at rarecoloreddiamonds.com. Get the companion to the podcast, our free weekly newsletter. Running down the numbers this morning, the US dollar at 96.18, Canadian dollar 74.88, euro at 113, the pound at 130, gold is 1278.80, silver is 1528. Gold silver ratio is back up around 84 again. Platinum 790, palladium $1,300.29. That means that palladium, yes, once again this week is above gold. WTI 52.59, Brent 60.84, Nat Gas 308, Bitcoin US 3,563.13, Bitcoin Canadian 47.56.90. A lot of people are waiting for Bitcoin to have an ETF. And one of the reasons we've seen a little volatility here is with the government shutdown, talks about starting an ETF have been stalled. So people are waiting on that. Dow is at 24,479, S&P 2638, NASDAQ 7,045, TSX 15,208. The government shutdown continues in the United States. If you can believe it, there are federal workers that are dealing with another financial indignity, servicing debt on their government-issued credit cards. They are receiving credit card bills for which they are personally responsible for work-related expenses they incurred before the shutdown, but can't get reimbursed because their agencies are mostly closed and funds are frozen. Obviously, another burden for people that are not getting paid. White House chief economist, we're going to see zero growth in the first quarter because of the shutdown. This morning, Donald Trump, president of the United States, announced that he will not do the State of the Union. He was pushing to do it. It will be put off. Harold, the government shutdown in the United States is a very serious thing. And at some point, somebody needs to blink because it's going to ruin what was a pretty good economy in the U.S.
You bet, Randy. You know, the thing is that the Democrats are probably not pushing to do this. I mean, they're verbally saying we need to end the, government shutdown and everything, but it's hurting the Republicans so much that I think that the Democrats will use that to their advantage. But heart goes out to everybody that is not getting paid, 800,000 workers. And then on top of that, certain people having to pay their credit card bills, which are work-related, when they have absolutely no money coming in and can't get reimbursed by the government, just makes things even worse. The economy has got to be affected by this in a huge way. Just, spending alone is going to be down because, people are too afraid to spend, and, it's going to affect the market. The market should be down substantially at this point. Just another example how the stock market can shrug off everything that doesn't directly affect the market. But you would think the lack of spending and the overall feeling that the country is going to be in trouble financially and economically would hurt the market. But again, that plunge protection team certainly does their job. And the market is certainly holding in there. It's up 120 points today, where the market should realistically be sitting right now with this whole scenario going on at about 22,000. It's sitting at 24,500. Really doesn't make an awful lot of sense, Randy. But none of the markets are really reflecting what the problem is. The dollar is still strong. It's trading between 96 and 97. The gold market cannot break 1,300 no matter how hard it tries. It should have easily broken through 1,300. But every time it gets there, it sells off again. Why in the world palladium would be more expensive than gold with everything going on at this point really does not make an awful lot of sense, because the reason that palladium is so high is because of the catalytic converter industry and because it's taken over for platinum. But now platinum is down to around 800. So platinum is a much better buy than palladium is. I anticipate that, once this is over, palladium will fall back off and platinum should be a good buy at around the $800 level. So the other thing that's way out of whack is the ratio between gold and silver. it should be around 20 to 1, 16 to 1 to 20 to 1, gold more expensive than silver, and it's at 84. So the whole market is out of whack. None of these markets are doing anything that can make you any money. It's very difficult to trade the gold market when it's trading in a 25, or $50 range. You can't make money in a market like that. The stock market up 100 points one day, down 100 points the next is not a good market. In fact, I don't have any money in the stock market, but if I did, I would be extremely concerned as to the volatility in a marketplace. And again, the fact that the market is somewhat manipulated not to fall during these particular times and make the scenario even worse. So again, there's really not a lot happening in any of the markets that can make us any type of money right now. So it's really just a matter of sitting back, not taking any risks, and waiting for the markets basically to come to us. The market in gold, 1,300 is an important number, but 1,380 is the most important number. 1,380, we would need 2 closes above that, and that would confirm a breakout in the price of gold. But until it does that, there's no reason to be buying gold if you're looking for shorter term profits. If you're looking for something over the longer term, I'm still a firm believer that gold is going to be eventually a $5,000 metal. But a lot has to happen in order for that to happen. One of the major things that would have to happen is the US dollar would have to fall substantially. Don't forget, when gold hit $1,900 in 2011, the US dollar was at 72 cents. So right now the dollar's at 96 cents, 24 cents higher, and that's why gold's at 1,300 approximately, as opposed to, the price it was at, when the dollar was much, much lower. So the dollar would have to fall substantially in order for gold to really break 1,380 and take off and get back up to around the $2,000 level.
Growing number of economists predict that the United States will experience a recession sometime later this year or in 2020. Investors are starting to worry about a downturn too. About 73% of investors expect a recession within the next 2 years, according to a survey of 260 professional money managers and analysts done late last year by Boston Consulting Group. Ray Dalio, founder of the world's biggest hedge fund, sees a significant risk of a possible recession in 2020. He's concerned about the markets. Jamie Dimon saying U.S. economy is like a ship that could hit a slowdown or recession. He's the head of J.P. Morgan Chase, expresses confidence in the U.S. economy, but says dangers are ahead. He talks about Brexit, China, government shutdown. If politicians get things right, the economy could grow at a consistent 3%. Hedge funds for 2018, not a great year. 6 in 10 lost money. The highest proportion since the financial crisis. About 40% of funds tracked by Preqin lost more than 5%. Hedge fund manager David Einhorn, his fund lost 30%, and he summed it up this way: nothing went right. The Bank of Canada Governor Stephen Pallot says he's keeping a close eye on developments in the nation's housing market, as well as global trade tensions and the impact of lower oil prices, as he gauges the timing of his next interest rate increase. After 5 interest rate increases since mid-2017, markets are now anticipating the central bank will have no more than 1 more rate increase lined up before pausing indefinitely here in Canada. This was the story, Harold, that I read, and I was absolutely stunned. 46% of Canadians $200 or less away from financial insolvency. This is a poll. The number of Canadians who are $200 or less away from financial insolvency at month end has jumped to 46%, up from 40% in the previous quarter, as interest rates rise, according to this poll. A survey conducted for insolvency firm MNP in December found that 31% of Canadians say they don't make enough enough to cover their bills and debt payments, up 7% from the September poll. The results released Monday also indicate that 51% of respondents say they are feeling the pinch of interest rate increases, up from 45%. But that is a stunning number. 46% of Canadians $200 or less away from financial insolvency. Harold, not good.
No, it isn't. That's a shocking number, and such a small amount of money, $200. That's really concerning, and the stress level has got to be extremely high. Again, things are not going well right now. Nobody's making any big money. To get into the stock market today, you've got to have big money. To buy Apple or Google or Amazon or any of those are not cheap stocks. Most people cannot afford them. So, in our reality, you're not making any money keeping your money in the bank. You're making 3%. And that's what, with inflation and everything and taxes, you really don't make anything. It's a very difficult time. That's why I'm saying at this point, there is nothing that I would recommend on a trade basis at this particular point that is, that would seem to me to be a slam dunk winner. The fact is that putting your money in stocks is a real crapshoot and extremely dangerous, extremely volatile markets. Stocks that can drop 30% in a short period of time, that's a big number. To drop 30%, most people that are in the stock market that have money own those major stocks, Google and Apple and Amazon and those, and they've dropped 30% this year or last year. Very, very difficult to make back up. And now you've got a situation, just as we were saying before, and just as you were saying, Randy, is that you've got a Brexit situation going on that is not only going to affect Britain, but affect the whole European Union. So we're back to that again. We thought that was over 2 years ago, but it's not. Now it's rearing its head again, and there's issues. And most of the companies in Europe and countries have not gotten back to where they needed to be. A lot of the debt and a lot of the problems were basically just swept under the rug for now, and they were going to obviously deal with them at a later date. But that date is now, because it's all coming to fruition. The Brexit situation is going to wreak havoc on Britain and Europe. The whole European Union will be affected by this. Now you've got the United States in trouble. Canada's in trouble. China's certainly in trouble. Where in the world are things going well? So now is the time to be ultra conservative. The fact is, I would love to make a recommendation like we made in gold and oil and currencies when our clients made a ton of money. But I'm not going to recommend something to you unless it has a phenomenal opportunity to do well. There's never a guarantee that the markets will always go our way, but we've been very, very successful in the past. When you've got a gold market that's trading in a $25 or $50 range, when you've got a stock market that's doing absolutely nothing, when you've got a currency like the US dollar and Canadian dollar that are sitting there because there's not going to be any movements in the interest rate markets, where is somebody supposed to put their hard-earned money? Just to put it into a market to hope that you're going to make money is not a smart idea. You're much better off picking up the 3% in the bank or just sitting back and waiting for another opportunity. Again, the biggest opportunity I see in the metals markets is not in gold, silver, or palladium. It's in platinum. Platinum has fallen too much too quickly, and palladium has gone up too fast too quickly. So I think that the next major move in the metals will eventually come in platinum, and the way that I would play that would not be in the futures market because we don't know how long it's going to take. I would buy physical platinum coins or bars and just put them away, because there will be a time in the foreseeable near future that market can go back up, to $1,100, $1,200, and we can pick up 30, 40% return on our money. So that's the only play that I see in the markets at this particular point that makes any sense to me. And I would not go into stocks or bonds at this time at all.
A $1,000 emergency would push many Americans into debt. Most people would be in a bind if they missed even one paycheck. Just 40% of Americans could pay an unexpected $1,000 expense, such as an emergency room visit or car repair, with their savings, according to a survey from Bankrate. In the United States, as Harold mentioned, Government is partially shut down, 800,000 workers not getting paid. 1 in 3 consumers fear they will max out their credit card in the United States. That's 86 million Americans that are saying they're afraid they'll max out their credit card when they're making a large purchase. Still, most Americans continue to take on ever-increasing amounts of credit card debt. In Canada and the United States, debt is an issue. But it's not just Canada and the United States, it's the entire world. This is why I really believe at some point gold, silver, hard assets are going to fly. Government debt worldwide is $66 trillion, 80% of global GDP, Fitch says. And then you have Alexandra Ocasio-Cortez. She was recently elected to the U.S. Congress out of New York. She is, in the Bernie Sanders camp, a Democratic socialist. She was on 60 Minutes, floated the idea of a 70% tax rate on those earning above $10 million. By the time we get to the presidential election, this is going to gain more momentum, according to Scott Menard, Global Chief Investment Officer for Guggenheim Partners. Ray Dalio says tax changes like those proposed by Ocasio-Cortez would have a huge impact on the economy. The income and opportunity gap will determine the winner of the next election. He says how rates are changed will have a huge effect on incentives and could have a huge effect on capital flows that will have big effects on markets and economies. The richest 1% own 50% of stocks held in the United States. That was another statistic that came out this week. Harold, we're seeing people in Canada stretched, the United States, massive government debt around the world. And then you have delusional politicians wanting to tax at literally absurd rates that would push money into other countries, and businesses will just pick up and move. That's what they don't understand. If socialism worked, then Venezuela would be just booming and everyone would want to move to Venezuela. But there is a problem because you can see the rich are getting richer, the average person is slipping, and something needs to be done. But socialism, in my opinion, Harold, is not the idea.
No, that's infuriating what you just said, Randy, because the fact is, it's just not right. If you're successful, if you've taken the risk of being in business, hiring people, building that business, growing it, paying your taxes, doing everything right, up to 70%, people would leave the country. They wouldn't. There's no way in the world. There's no incentive, for anybody to live here that's successful. And you're 100% right. We'd be Venezuela. The idea of paying 70% tax is absolutely sickening when you really think about it. It takes all the motivation away from somebody trying to open a business, take the risk of being successful, and then if you are successful, you're no more successful than the everyday guy because you're losing 70% of your money. So it's a ridiculous thing. This woman should be thrown out of office. But unfortunately, with the millennials, the way that they think, and now with the way that Trump is and the way that the government shutdown is going on and he's losing so much popularity and all that, it's a very good opportunity for the Democrats to walk in and accomplish what they want to accomplish. But I can assure you, the amount of wealthy people that would leave this country would be substantial. I just don't see somebody paying 70% tax just to be able to support people that don't work.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Get the free weekly newsletter, the companion to the podcast. This week in our gold and silver section, billionaire Sam Zell, and he is smart money. He's made his fortune in real estate. He bought at the bottom, sold at the top. He's done it many times. He picked up gold for the first time in a bet on tight supply. For the first time in my life, I bought gold because it's a good hedge. Supply is shrinking, and that is going to have a positive impact on the price. Gold mining veteran Rob McEwen is still predicting $5,000 gold. He's the founder of Gold Corp. He's sticking with his bold prediction that the precious metal will soar almost fourfold to $5,000 an ounce, bolstered by a weak dollar and waning demand for trendy assets like pot stocks. He says once people get over buying cryptos and biotech and cannabis stocks, they're going to start looking at gold again. And he thinks that we could hit the price target of $2,000 and beyond, and he's saying that it could eventually go to $5,000. So far, he has not been right, but he has made that prediction once again. Harold, I really believe with the government debt around the world, the $66 trillion, something has to give. And eventually, hard assets, as well as they've done, I really believe they will take off at some point again because it is just a mountain of debt.
Oh, you better believe it. And the U.S. owns a third of that debt, so they've got 20 some odd trillion of it. So that's a big, big number. As interest rates went up, it was a even bigger number. And eventually, if the government gets into more trouble and the dollar starts to fall, then inflation's going to be even stronger. And then they're going to have to raise interest rates again. So, that's why other countries are holding off. But the U.S. owns a third of that, $66 trillion debt. And that's a big, big number. A number I'd be very, very concerned about.
Harold's website is rarecoloreddiamonds.com. We really believe there is an opportunity in Argyle pink diamonds. The 2018 tender was another smash success for Rio Tinto that owns the Western Australian Argyle mine. Why do we think it's going to be a winner? They're going to be shutting down in 2020. The mine will be done. They do a tender every year. In fact, Rio Tinto CEO Jean-Sébastien Jacques said, people know that maybe we have another 2 or 3 of those tenders before the mine closes. 90 to 95% of the world's pink diamonds will be gone. And another quote from David Farden, Perth-based Linneys. What we've seen in pink diamonds has been approaching in the order of 10 to 15% per annum. And that verifies what we've heard before. Also, Josephine Johnson with Argyle Pink Diamonds, a manager. It's an incredible rarity that's becoming appreciated around the world, and we do see bidding from all corners of the globe for these rare diamonds. From the Rio Tinto 2017 annual report, the remaining reserves underpin the operation until 2020, with opportunities to increase reserve estimates and extend the operational life subject to technical and financial performance. 2 years away, roughly, the mine will shut down, maybe 2 or 3 more tenders. That is it. One of the great quotes that we've found, and we've repeated it many times, is from Chris Delgado, a jewelry expert. Jewelry is an investment you can wear for 30 years and then sell. What else can you do that with? And so many people have invested in rare colored diamonds through rarecoloreddiamonds.com, Argyle Pink Diamonds. It's been a real winner since Harold brought it to our attention back 15 years ago or so. Harold, now is the time to get into Argyle Pink Diamonds because they are a very unique opportunity.
You better believe it. If you can get your hands on any, I think it's just a great investment. I mean, it's economics 101. They own all the supply, and the demand is extremely high, and now the supply is going to be gone. The mine is going to close. It was discovered in 1985, 1986. It was a huge producing diamond mine in Australia, and basically the Argyle mine was producing 30 million carats of diamonds a year. Now, 30 million carats, most of those were low-grade industrial white diamonds used to cut other diamonds and used in diamond bits and drills and things like that. But out of all of that came the world supply of pink diamonds. And the mystery of pink diamonds is nobody knows why diamonds turn pink or red. We know why diamonds turn blue because of boron. We know why diamonds turn yellow and orange because of nitrogen. We know that uranium turns diamonds green, but nobody knows for sure what turns a diamond pink or red. So the Argyle mine produces 95% of the world's pink diamonds. It's going to close next year. There will not be any more diamonds coming out of the mine after that, once they run out. And owners of those diamonds, I believe, will do very, very well. Now, normally diamonds are a long-term investment that you're going to hold on for years and years and years. In this case, the mine is going to close in 2020. Give it 2 or 3 years for all the diamonds to be gone, and then we start putting diamonds up for auction. I think our clients are going to do extremely well in the pink diamond market. Now, as far as the Argyle tender goes, if you take all the diamonds over a half a carat and put them into a champagne flute, it would barely fill that flute. That's how small the pink diamond market is, and why these diamonds are so valuable. And again, by 2020, the mine will close, and it's closing because it's just not profitable anymore. They're not producing enough diamonds to keep the diamond mine open, and they're going to close it. If you're one of the lucky few to own an Argyle pink diamond, I believe you're going to do very, very well.
Mira Chen, the CEO of the Fancy Color Research Foundation, said fancy color diamonds are so rare and beautiful, they have become a serious investment opportunity. Get our free weekly newsletter from Harold. Connect with him at rarecoloreddiamonds.com. Ask about Argyle pink diamonds. A story that we have, crucial reasons why you should consider investing in colored diamonds. They talk about global recognition. Diamonds are recognized worldwide for their value, and fancy colored diamonds are even more so. Portability, because of their size, can be transported very easily. Long-term growth, as we mentioned, 10 to 15% a year. Value retention, unlike colorless diamonds, fancy colored diamonds do not have a fixed price, and they retain their value. Durability, obviously diamonds are very durable. Rarity, we know that, as Harold just touched on, here you have, and we have the picture from past newsletters where you have the champagne flute and you have the Argyle pink diamonds. For the entire world, they have such a small amount, and that's why the prices are going up. They're exceedingly rare, the rarity factor. Also privacy, because of their size and portability, you can safely store diamonds anywhere with no one really being the wiser. So privacy is definitely something to consider. And then they are just simply beautiful to behold. You walk into a room with a piece of jewelry with rare colored diamonds, and you will be the star attraction. The conclusion: fancy colored diamonds obviously are very rare, and when it comes to the Argyle mine, they will no longer be around very soon. So now is the opportunity to position yourself prior to the mine shutting down, and then the secondary market will determine the prices. When you take away 90 to 95% of something, an investment, it's going to be even more rare than it already is. And Harold, over the years to come, I would literally be shocked if Argyle pink diamonds don't go up very strongly year after year after year.
I believe they will. That's why we invested so heavily in them. So again, they're beautiful, they're rare, and there will soon be no more of them. So again, it's something that, it's a longer term investment most of the time. You put it away for the family. A lot of people buy them to put away for 10, 20, 30 years for retirement. You're going to find that they should do better than other investments. And again, they don't trade on exchanges, so you don't get that volatility that you get in stocks and commodities. You own it outright, just like we've reported so many times in the past. The best example is Shirley Temple's diamond that her father bought her in 1940. It was a blue diamond. He paid $7,000 for it, and last year it sold for $25 million. Now again, the diamond is 78 years old, but still within the period of time that she was alive and in her family trust, an asset that was purchased for $7,000 was eventually sold for $25 million. Now, I'm not saying that all diamonds are going to do that. Of course not. It happened to be an extremely rare blue, and blues have gone up substantially, and it was a larger diamond. Most of the Argyle pinks are small diamonds. 95% of all Argyle pinks are under a quarter carat. You're talking about the most intense colored diamonds that are so rare and again so valuable, even though they're of smaller size. So I personally love them. I own several myself. I've got my own collection. Many of my clients have their own collection, and we are looking forward to the time that we will sell them within the foreseeable near future.
As we get to the end of the podcast, some interesting notes. Canadians purchased $54 million of marijuana from stores in the first full month after sales were legalized. Some people believe that's really good. Others, I've heard, listening to a radio interview, said that people did not purchase the way they thought everyone would. It has not gone exactly according to plan. Also, DJI, they make drones. They're a Chinese company. They found there was fraud within their organization. There's $150 million missing. Patek Philippe, closely held watchmaker, they are possibly up for sale. That was reported by Bloomberg this week. It's a rumor that's flying around that they could be for sale. The richest person in Britain? Oh no, it's not the Queen, our beloved Queen. James Dyson, the inventor of the Dyson vacuum cleaner, is now the richest man in Britain. Speaking of rich, Citadel founder Ken Griffin, that's a hedge fund. He purchased 3 Carlton Gardens, a 200-year-old home that overlooks London's St. James Park, about a half a mile from Buckingham Palace. He picked it up for $122 million. And oh, wait a minute, he made another purchase. In fact, I saw it on the Drudge Report this morning. He picked up a penthouse in New York City for roughly $238 million. The deal sets a record for the highest priced home ever sold in the United States. So the guy must have money if you're dropping $122 million on real estate in London, $238 in New York City. Super Bowl tickets, they don't come cheap. The average price for the Super Bowl 2019 ticket in Atlanta, Georgia right now is about $5,320 as of January 22nd. That according to resale site SeatGeek. Congratulations, Harold. Your New England Patriots will play in the big game against the Los Angeles Rams. Brady and Belichick, Harold, let's be honest, they need to retire. They're no good. They need to pack it in.
I'm thrilled, man. I'm just absolutely thrilled. I'm a diehard fan. Now, being Canadian, I have nothing to do with Boston except, my claim to fame was that I played hockey for 2 months with Bobby Orr. But aside from that, being Canadian, the reason that I like the Patriots is that Michigan was a college that I followed while I was in Canada. And it happened that Brady played for Michigan, and I liked him. It wasn't that he was the greatest quarterback there. I just liked everything about the guy. I thought he represented everything good in a player, and motivation and hard work and doing the right thing. And he was actually picked in the 6th round. He was drafted by the Patriots. 199th, this guy was picked. And he's turned out to be the greatest, not only the greatest football quarterback of all time, but in my opinion and many others, the greatest of all in all of sports. Now, again, you're talking about Michael Jordan and, and LeBron James and guys like that included in it. And the one thing that bothers me, though, Randy, is that whenever they talk about the greatest sports person of all time, they're missing the greatest sports person, which was Wayne Gretzky. And very seldom do they talk about how great Gretzky is, but Gretzky's records will never, ever be broken. There's never been anybody close to scoring 245 points in a season. What was that, 100 goals and 145 assists in one season, and he's come close to that number 2 or 3 times. So when you talk about the greatest person in all of sports, I put Wayne Gretzky is number 1 in my opinion.
Wayne Gretzky, one of the greatest of all time when it comes to sports figures, without a doubt. Can't wait for the Super Bowl in a couple of weeks' time. It's going to be so exciting. It's Brady and Belichick, the legends, up against the young guns, Bay and Goff. I do predict that the Patriots will win. That is my prediction at this point. I just think Belichick and Brady are just going to make history. 6 Super Bowl rings. Stunning. But people have to understand, whether you're a football fan or not, what we're seeing today in the NFL with Brady and Belichick is history in the making. This will be talked about hundreds of years. What they've done is so unique, so rare, so hard. It is staggering to comprehend. Because we're caught up in the moment, we take it for granted, but sit back and really reflect. We're in uncharted territory with these guys. This is history every time they take the field. Watch it, enjoy it, because I really doubt it will ever happen again, Harold.
I agree with you 100%. It'll never happen again in professional sports. And just very, very happy to have been a fan for the last 20 years. And, with all the stress of life and business and everything, people lose themselves in sports. And I'm no different, and Randy's no different. And, it's a release. It's something, that you can escape to when the pressures of the world are upon you. So, again, just happy to be a New England fan. I'm a big Canadian fan, though. I'm a big fan of everything Canadian. I love the Raptors. I love the Blue Jays, and being from Toronto, I love the Maple Leafs. We haven't won since 1967, but it's looking like we got a shot this year. So all in all, sports is something that, if you're into it, I'm sure you'll agree with me, can bring you an awful lot of pleasure.
It was great to see Roy Halladay, who passed away in a plane crash, get into the Hall of Fame. He played with the Blue Jays, obviously, and the Philadelphia Phillies, but a great pitcher. Blue Jays, they drafted him, they developed him, and he was one of the greatest of all time, got into the Hall of Fame this week. So congratulations to the Halladay family and the Toronto Blue Jays. It was a great story. Harold, thank you for another podcast with your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. Get our free weekly newsletter, the companion to the podcast. You can do that through the website rarecoloreddiamonds.com. That's it, another edition of the World Financial Report. For Harold Siegel, I'm Randy Marshall. We will talk to you next week.